Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, January the 18th, 2011. Well, a continuation of the trend to the upside today. We have another candle making a higher high and a higher low. Unfortunately though, the candle today is not as bullish as the previous day's candle. Previous day's candle was a very large green-bodied candle, and it denoted the buyers being in control, showing very strong commitment, and the buyers making some very strong net bullish progress. Today, the market has closed up towards the high, so the buyers did close the market in control, and they have shown some commitment. The shadow on the lower part of the candle, the longer shadow, represents the sellers losing commitment, so from a point of view of the bulls, that's quite positive. But the worrying thing is the size of the body of the candle, and the size of the body means that the bulls did make, the buyers did make some net bullish progress on the day between the open and the close, but it was quite a bit smaller than the previous day's trading. Now that isn't how you like to see a trend continue or establish itself, and we have seen a few very large green-bodied candles. We did see a small red-bodied candle, but today this is a little bit of a worry, this type of candle. It's almost a hanging man type candle, not quite because the shadow on the bottom isn't quite big enough. But this is all happening as the market's approaching this very strong potential resistance up around 1300, a round number. So we can see the influence of that coming in. So there is a good chance that the market will correct, but we do need evidence of that. So evidence would be a candle with a lower high and a lower low. So we do need to watch the low of the current candle. That becomes very important. So if the market takes out that low, there's a chance that we will have that change of trend to the downside. Now, obviously, just looking at, and I'll just move this chart down a bit, the market will find strong resistance up around 1300 if we do continue with the trend to the upside. And if we do break out up above there, then we do have this zone of resistance extending up to around 1313. So the market may find resistance anywhere between 1300 and 1313. Now, in Ichimoku charts terms, the market is still quite bullish because we are trading up above the cloud, and we are trading a long way up above the cloud. So when the market's a long way up above the cloud, it starts to look as though the market's a little bit overextended, and that's what's happening here. So a pullback towards the cloud or some sort of congestion area where the market will eventually meet the cloud as it trades on and on over the next few weeks is not beyond the realms of possibility. Now, just looking at the other indicators, the Kijun-sen, which is the pink line, and the Tenkan-sen, the market's trading up above both of those indicators, and that tells us that the market is bullish in the medium-term and fast-term time frames. And both of those indicators are pointing up, reflecting the fairly strong upside momentum that we have in this market. Now, as well as having the market trending up in the first time frame with this higher high and higher low, we also have a very strong trend in terms of peaks and troughs, and that's what defines the trend in the second time frame. We can see here how we have a market that's making a trough, a peak, a higher trough, higher peak, higher trough, higher peak, higher trough, higher peak, higher trough, higher peak, higher trough, higher peak again. Now, this trend has been moving to the upside for a long period of time, and we know that these trends don't go on forever, so it wouldn't surprise to see this market come off somewhat. Having said that, though, we don't have any solid evidence of that. Maybe a possibility of it happening because of the short-term dynamics, what we're reading about the supply and demand in the current candle, maybe a first time frame pullback. And if we do have that, then the market will possibly find support down around this level, around 1280, or the top of this rectangle pattern that the market broke out of. We can see here the shadows on these two candles where the market tested that area and bounced off there. So that's an area where the market might find support. Also at the Tenkan-sen, it's trading around that area at 1278, so that adds more probability to the fact that we'll find support there. Down below there, we have very strong potential support around 1265 down to around 1260 at the bottom of this congestion area that the market broke out of, and 1265 was a previous number of where the market found support and resistance. And this also coincides with the area where the Kijun-sen is trading at the moment too. So for the next day's trading, we do need to watch the low of the current candle for a potential lower high and lower low, and potential test down to roughly 1280. But certainly watch the high for any continuation of the trend to the upside, and a test of 1300, and then potentially up to 1313.